Good afternoon, guys. Happy Friday. Happy Friday. So just a quick one. Today, I just want to share the tip of the day. This is something we will be doing every Friday, just to share whatever tip we can share within the financial industry. If you haven't seen any of our previous videos or we haven't addressed any topic that you would like to hear about. So today's tip of the day, I've got two majors, right? And these two majors might result in your claim payout not actually paying out. So if you want to make sure that your claim pays out, stay tuned. So initially, I've got two major topics, right? The first one is accelerated benefits. If your policy is structured with accelerated benefits, you'd want to hear this. And then the other is accidental cover or an accidental policy. So this was brought about by the clients I've been dealing with in the past 2 weeks. A number of them were not aware of how their policies were structured and what their policies were for. Now, upon me doing the review for them and sharing this information, they got a bit of a rude awakening, because we all want the peace of mind to know that these policies that we're paying an arm and a leg towards are actually guaranteed to pay out when the time comes, right? So I'll get straight into it. So if your risk policy, this is your life cover, disability, and dread or critical illness cover, is structured in an accelerated structure, this simply means that in the event of you claiming for a disability or a dread disease, that money, that payout will basically reduce from the money of the life cover. Yeah? So in other words is that the clients who have their policy structured in that way should basically just be aware that their dread disease and disability cover would basically eat into their life cover amount. So let me give you an example for this to make a bit more sense, right? So Tabang has a life cover for R1 million. He has a disability cover for 300,000 Rand, and he has a dread or critical illness cover for 500,000 Rand. Now Tabang contracts a dread disease or he gets a stroke, and he claims his first 500,000 Rand, right, for his dread disease. Cool. Financial provider pays out. Great. And then along the way, Tabang needs to be amputated because, hey, his stroke led to something more dire, so we needed to amputate. And now Tabang is disabled and he is no longer fit to work, meaning he's no longer employed. And okay, but he has a cover. It will pay the 300,000 Rand from his disability cover. Awesome. And 6 months down the line, unfortunately, Tabang loses his life. Now his spouse reaches out to the financial provider because while Tabang was alive and healthy, he promised his spouse that in the event of his untimely death, hey, Mama uzotola R1 million. If anything, you will be touching R1 million from me, right? For the first time, I would have created that for you because I love you. Great. The spouse for her whole life knows that she will most likely receive R1 million in the event of my untimely death. But Lord and behold, when she goes and claims for the life cover, it only pays out 200,000 Rand. What happened to the 800,000? 500,000 paid for the dread or the critical illness. 300,000 paid for the disability. So clearly, out of the R1 million that was in the life cover, only 200,000 Rand remains because 800,000 has already been paid out. And that is what accelerated means. It accelerates the funds within the policy. It accelerates the funds from the life cover into the disability and the dread disease. So unfortunately, now the wife is distraught. She's no longer a millionaire. And now she's reaching out to relatives, going to social media. I'm a financial provider. And in essence, this is how we actually get to getting a bad name as the insurance industry because we don't pay out. And we don't pay out because of things like these. Initially, the money was there, it had paid out, but unfortunately, said client didn't entirely understand how the policy was structured. So guys, I'm sharing this just to make you guys aware. Unfortunately, I am a bit short on time because I still have meetings for the remainder of the day. So yes, if you're not too certain how your policy is structured, if this might be a possibility, please reach out to your financial advisor, have a sit down, have a review. If you do not have a financial advisor, we can gladly assist. Please don't be shy to reach out to us. So if you're currently wondering as to why then would a policy, why do we have this benefit? Why do we have this accelerated structure? Just to realign you so that you do understand why. All of the benefits, the bells and whistles that we have within the life insurance industry are all beneficial for specific reasons. So just 2 reasons that I will share based on how I've assisted my clients and how some other clients have their policy structured. So an accelerated benefit would be best if this policy was for a bond. Yeah, I just purchased a house. My house, the cost is 1.5 million, and I want to make sure that I protect my asset and protect my family, right? So what I would then do is that I would reach out to the financial advisor and say, can you please help me? I need to protect my asset as well as make sure that my family doesn't have to deal with that debt in the event of anything happening to me, really. Okay, so Mr. Advisor would then say, awesome, this is a bond cover for 1.5 million. I will make sure that we protect you in the event of you losing your life, becoming disabled, or contracting a dread disease. So all of these benefits, the payout amount would be 1.5 million. So that in the event of you becoming critically ill, 1.5 million pays out. And if it pays out, clearly we no longer need these other 2 benefits. So they would fade into the background because that money has been paid out. I hope I'm making sense. Initially, that's what you would use it for. Same with a loan. Say you have a business loan or a credit loan, whichever, and you want to make sure that that loan is paid off in the event of us losing your life sooner than later. That's how you would structure the policy. Have it be accelerated so that in the event of you becoming disabled or critically ill, the lump sum can pay out to squash that debt. And then, of course, your personal policy that has the comprehensive disability and dread disease will then pay out its lump sum to provide and cater for the additional medical expenses or just to ease you into your new situation or new condition and basically supplement your income as well. So guys, I need you to understand that you can have multiple policies, but these policies would have to be catered for specific needs. I hope I'm clear. So just to get into the second major, which was the accidental cover. So if you have an accidental cover or an accidental policy, I need you to understand that that's exactly what it means. It's for an accident, and this pertains to the life cover alone. People have an accidental life cover. This means that you would basically have to lose your life due to an accident. That's the only time it pays out. And if you were to pass away due to an illness, it will not pay out because it's not an illness life cover. It's an accidental life cover. So that's where I will be ending it. If you're not too sure, read up on your policy schedule, guys. Ask the right questions with your financial advisor, set up a meeting, go through that policy schedule with an advisor so that you can ask all the questions you need to know and be comfortable at the end of the day and have the peace of mind knowing that these policies will pay out in the event of any unforeseen event happening to you. Yeah. And of course, happy wife, happy life. She can get that million rand I had promised her to say uzoqala ukuthinta million rand ingam. So I'm just basically sharing this just to make you guys aware. As I said, it is tip of the day, so we intend to share tips of the day every Friday, so look out for these. Please do subscribe, share our videos, because this might not pertain to you, but somebody you know might actually have their policy structured in this way. And maybe you might be a beneficiary on one of the policies that are structured in that way. So we just don't want people to be shocked when certain policies don't pay out, because you did not take it upon yourself to review that policy and understand if you are comprehensively covered. So once again, we basically here to urge you guys to think long term and start taking your life insurance a bit more seriously. So from me to you guys, a lovely Friday ahead, a safe weekend, and a warm one too. Cheers.